Good afternoon, Scott Redler, T3 Live. Welcome to today's recap, Friday's recap. Probably one of the most trying weeks we've had in a while, or a week that definitely was very complicated. A week full of hype, a week full of hope, a week full of just pretty much expect the unexpected. And even if you were expecting a correction or a downward move, sometimes it's like be careful what you wish for because you don't want it. It's hard to deal with when it's going on. And a lot of guys yesterday were sending me emails. Oh, Red Dog, you said 1300, 1320. You must have killed it. Red Dog, thanks for getting me out of my stop or my stocks when we were at 1390. I got short at 1360. I'm just covering. It's very sometimes when you get to the objective that you think, you always reflect and be like, how could I have handled it better, or how could I have done it different? And that's one of those time periods because everyone hates to miss out on opportunity. And as far as just to touch on Facebook, what a disaster. The most over-talked about, over-hyped IPO in history, whether it was the investment banker's fault for being a bunch of pigs that valued it at $100 billion before going public when the company's revenues are decreasing and they're going through a growth slowdown or whatever it was, to the media every day talking about it and saying, be careful, don't buy it, don't buy it. And lo and behold, I'll get to the trading of Facebook thereafter. But all in all, as far as the markets, we've talked about this head and shoulders top pattern that's been in place. It was building for the last 6 to 8 weeks. It triggered. We're at the measured move, and now it seems as if we're going through the overshoot. Now, the overshoot's always hard, and that's why I always get a little bit frustrated because I cover a little early and I buy a little early because during the overshoot, you never know exactly how far they're going to push the envelope. And if you look here on the SPX, you will see that here you go. If you look back at the chart, it looks very, very technical. Like you don't get better than this. From this uptrend that got broken right around here, right around the neckline, okay, of 1360, or even the accelerated uptrend that started right here or re-energized right here that broke. The first time IBD put us in market correction was right here. The second time was right here. So even if you were upset that they did it and you missed that, you know what? If you did it this time, you saved yourself a lot of pain. Here is the left shoulder, here's the head, here's the right shoulder. You want to do your quick little measured move. Your measured move takes you to about 1360. From 1420, 1360 takes you down to about 1300 or so, which we definitely closed right around or below. So if you look at it like right here and you say, okay, what would I rather be? Would I rather be long into this retest of this prior breakout and into the measured move? I would say, yeah. I would definitely say you cover your shorts around here. Maybe you don't make exactly the amount you can make if you caught the ultimate bottom, but who needs to do so? But you started buying, like I started buying yesterday. I did it with a plan and got a little chopped up. I just didn't have the wherewithal. I don't have to take it into the weekend. You have the 200-day right here, which is around 1278, and we haven't had one of those gap down reversals in a while. We keep opening up like 4 or 5 handles and getting no traction. So it's been a better short than a long. So with Facebook out of the way and it being a pretty much non-event disaster, to all the headlines have been coming out about Greece. I don't think there's any way they stay in the Eurozone. They're going to be kicked to the curb, and that's just a matter of time. Let's get that over with. Spain, headlines, not good. Italy, we started hearing that today. U.S., slowed down, earnings, done. Like there's so many things that are out of the way that I don't see a catalyst. And sometimes I guess when there's no catalyst and you don't expect it, they try and make as many people feel stupid as possible. Who knows? But at this point, I've been saying to myself, I want to buy 1300, and I think it'll be great for an oversold bounce. And I just didn't have the wherewithal to buy it today for a Monday. If we open down, I'll go after it. But it's just, even with Apple acting decent today, I don't see it. So I'll see a better setup, and I'd rather preserve cash today. Today was actually a good trading day if you were a surgeon and you took advantage of the moves and you took trades. But every time you get so depressed to the downside, people don't want to take the trade because they think that it's a bigger trade, and that's when you start getting in trouble. So again, we're into this spot. Hopefully if you were short, congratulations. You covered into this support, because if you look here at the chart, you will see this is not an area to short. This is more of an area to cover. You had your time to get out of this market. If you were watching it technically, you had your time to get out of it when we broke 1390, and then you had your time to get short right around this 1360 when we broke the neckline and hovered and then broke 1343, and then here we are at 1295. Not a time to get short, but definitely a tricky time to get long. And if you look at some charts now, there's been a lot of clues on why we're not bouncing. First of all, JP Morgan and the banks. JP Morgan, still problems, still in the news, and this was when the this is when the news came out. It tried to stabilize. You had your 2-day down move. We tried to figure out whether or not there would be a lower pivot, and then once it broke below this 35.76, I don't care that it's JP Morgan. You had to get out of the way, and you saved yourself some money. At this point, it didn't make new lows at the end of the day, so I guess it's a slight positive, but all in all, still very, very broken. We'll see what happens on Monday. We'll see what the news is, and it's very disfortunate that this happened to one of our best investment banking firms, because now, it's almost like DTA, don't trust anyone. How do you know who to trust? As far as the XLF, you look here, last time we started talking about this was right around here, and if you want to look technically without even knowing what's going on, once we broke this 1480 or once we broke this 1440, you have to have stops. And then yesterday we were trying to think about an oversold bounce in the market, but then you had the XLF, or not the XLF, the XHB breaking down, which we had off the charts. XHB, look at this. This was the chart pattern we had off the charts. Said if it gets below 21, get out of the way. And since then, the home builders, nice calculated short. I know Sperling caught this pretty well, and this also has been weighing on the indices. RTH has talked about support there too. What did it do? It broke it. So how are we going to rally if the RTH has been holding higher, started to also roll over? So this 4090, mentioned it many times, broke to the downside. So did a lot of stocks. So obviously you're not going to bounce. So down here, do you sell? It's complicated to sell it down here because you missed when it broke this upper level. You missed selling it when it broke this lower support. So down here, it's a hard buy and a hard short, which makes a complicated market. Same way with the IWM. We were talking about, think about what level I was talking about. What was it, 77.97, which is right here. You look at the Quotron, 77.97. It hovered here, then broke below. So at this particular point, the Russell's been a source of weakness. We're now coming into support. Do you sell now and run for the fences? Probably not. You missed it. You missed your high, your lower high. Look right here. This is your push-through failure. Remember we talked about red dog reversals? You look for signs. Look what happened right here. It pushed through and failed. That's your sell signal. And then if you didn't sell it there, once it broke this higher level support, you got out. If you didn't get out here, look what happened there. So if you're upset with yourself, be upset with yourself because you're missing all the technical signals. There are technical signals to get you out of things so you don't have to hold your nose and go underwater like the rest of the world does, and that's what we try and teach you. And again, even if you didn't handle yourself on the short side the way you could have, because we've been talking 1300, 1320 from about 1365 and then selling at 1390, at least you could have been out of your stocks, you could have been safe, and you could have been ready to jump or get involved. And I know we've been trying to dip our toe in the last day or two, rightly so. You're getting chopped up here better than getting sliced in half or sliced in 10% of yourself if you just held your nose. So with that said, maybe there'll be a better chance Monday, Tuesday. Google reversed pretty hard. What are you going to do? This now, to me, is pretty severe looking. Look at this chart. I know it tried to break above. This was one little signal. When it broke above here, I talked about in my price point sheet today. I said as long as it stays above 617, which was right here, technically it's acting okay. Not only did it pierce it, it went to the bottom end of the range. So I would be careful here. Amazon coming into the gap. So it's showing you that it's starting to lose its earnings power. So at this point, another soldier being lost in battle as it started to trade below this 218, closing on the lows. So you got to be careful there. Apple gave us some nice opportunity today, but all in all, if you didn't sell correctly, you had a round trip where it rallied back up to the previous highs before selling off to close near the lows. So hard to take home. So I didn't. All in all, it was a great trade off the open. But again, if you don't take your trade pretty damn quick, you get hurt. And I talked about it on Stock Twits. I said if we can get above 535, yesterday afternoon resistance, we probably can get a nice move to maybe 541. We went through 541 and then we stopped at 543. And if you look here in the chart, you'll see exactly where that happened. Here was this mini downtrend that I was tracking pretty close. I had it spelled out on my trading system. I talked about it. You had to move lower, negated. This is a king and queen setup where you have a red bar met by a green bar showing you some power. This was your entry. Then you had to pick out where you want to sell it. Okay, coming right into the moving average, right into some bigger resistance. I know Laz was shorting here. And then once you had a little bit of a flag type pattern, excuse me, that failed, you could have sold some and kept your money. For me, I kept the majority of my money in here. I tried to trail it, but it didn't work. So I sold it at the end of the day, and I'll revisit. So go back to the daily chart. We'll see what happens tomorrow. We'll see how it deals with today's low and see if this 100-day holds. And then the next level here is 520. So with that said, there's really not many things to grab on. And when there's not many things to grab onto, you try and be risk averse. You try and preserve your capital. You try and be safe. The world's been looking at this Facebook. Again, let's go to the chart real quickly of Facebook because, you know, I talked about it. I blogged about it a few different days. And it pulled in real quickly, which was definitely surprising from a lot of different standpoints. It could have been that it was put off. It was supposed to open up at 11. It opened up at 11:30. So it opened up, which we all talk about, writing down 42. So if you wrote down 42, you write it down. You don't trade until you see a pivot bottom. And here, you didn't see a pivot bottom until it held 38. Okay, so at 38, and was the IPO price, which you also tweeted about, it was worthy of a try. So right then, you know, I actually bought at 38.30, right around here, and I said, I'll give myself 30 cents. I tried a little bit of 40, lost a little. Tried a little bit here, lost a little. But finally, when I saw, you know, a pattern here versus 38, this is when I went to like tier 2. And then I think one of the blog posts I talked about when I got the video is like if it starts getting above this 41, you know, it can get some continuation. So I bought more above 41, but first time typically at a major zone, which was the open at 42, it fell. So I sold some into 42. So buy one, buy two, sell some, hold tier 1, and then it looked like it was going to hang out and go well. It looked like as if it was going to break to the upside if the market let it. So at this particular point, I think I had tier 1 left over, and I had to actually go out for a meeting. So I'm like, you know what? Let me put a buy stop in at 42.10, which it never got above, and let me put a sell stop or a stop loss below this area, because if it gets below 39.61, it's not going to be technically good. That means it's breaking down. It means it's failing. So by the time I came back, I was out of Facebook, and look what happened here. It not only tried to break the wedge to the upside, it broke it to the downside, never reclaimed this area, okay? And then you had your last, I guess, line of defense here when it was trying to hold 40, broke below 40, and then closed near pretty much, you know, the low of the day. So at this particular point, anyone who is still in the deal is probably a little worried. Anyone who's in the secondary market that owns it from 32 to 36, because I think that's where they bought it, they have 6 months now to catch their breath and worry about whether or not it's going to stay above there. The metrics are poor. The fundamentals are not worthy of the valuation. I think everyone tried to do the best they can to do the supply-demand game, and there was still pressure. So we'll see what happens. We'll see what happens on Monday. You'll watch 38. Unfortunately, we can't trade it. We're not market makers. I mean, it's to the short side, so some people will be shorting it. And if you can't trade it and you're stuck in it, you'll see what happens. But when everyone owns something and it seems too good to be true, it's never true. We all know that. That's the name of the game in the stock market. I actually have to catch a ferry because it's a Friday. Bottom line, not an easy week. Even if you thought we were going to get to 1300, 1320, it was hard to stay short the whole time. We were trying to short Apple, 560, 555. I know Laz, a lot of guys crushed it. It was still not the easiest trade. And now it's like on the flip side. And there's just a lot of choppy, unknown scenarios going on out there. There's still a lot of complicated headlines for us to absorb and deal with. So at this point, less is more. I think we're almost 9% off the high, so we're getting close. The oscillator, I think, was over 80, maybe even more than that. So if we can get the right setup, I think Monday, Tuesday, we'll be able to make some nice cash flow, and then we'll figure out if we can stay with it for more than an hour, because lately the only way you can be long is for an hour, and then you have to sell that long, become short, and the shorts are making a lot of money following this trend, and the trend hasn't changed yet. So let's see what happens next week. Have a nice weekend. Try and do something that makes yourself happy, because in these complicated times you need to blow off some steam. And for me, it'll probably be about a 100-mile bike ride in the morning. Have a good night, and hopefully you did all right this week. And if you didn't, just take a deep breath, and next week's could be better times for you.